Taiwan Semiconductor stock is reaching record highs and gaining significant investor interest because of its position as a supplier to the artificial intelligence industry. It's most popularly known as being one of the primary suppliers to Apple for the iPhone and NVIDIA for its GPUs and other technologies. It's not surprising, I should say, that Taiwan Semiconductor is gaining so much investor interest. In this video, I'm going to do a discounted cash flow valuation analysis of Taiwan Semiconductor stock to answer how much I think the company is worth according to its intrinsic value using the discounted cash flow valuation method. Now, this method uses many and several estimates and assumptions to make the price target prediction, but I'll share with you precisely where I'm getting all of the numbers from and where, if any, I'm making adjustments, so you could determine yourself if my calculation is on point, too pessimistic, or too optimistic. So let's get started. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. Right, so one of the numbers I need is its current market price, so that when I find the intrinsic value, I can compare it with the market price to determine if it's undervalued. Taiwan Semiconductor currently trading at $196 per share, near record highs, as you can see. The next number I need is the company's free cash flow for the most recent trailing 12 months, which came in at $22.34 billion. Next, I need the company's total long-term debt, and that is $29.62 billion. And I need the company's cash and short-term investments balance, which stands at $68.59 billion. And also, I need the share count, which currently stands at 5.186 billion shares outstanding. And finally, I need the current market capitalization, which Taiwan Semiconductor recently surpassed that elusive $1 trillion market capitalization milestone. All right, I also need the company's beta, which I'm getting from Yahoo Finance here at 1.27. And finally, to forecast growth in free cash flows, I'll be using the company's next 5-year estimate for earnings per share growth coming from Wall Street analysts that are following Taiwan Semiconductor stock. They think this company will grow its earnings per share by 21.5% over the next 5 years. All right, so now that we've got all of the estimates, assumptions, and numbers that we need to make this valuation, we can jump into my model here for Taiwan Semiconductor's discounted cash flow valuation. And this is as of October 28th, 2024. So let me draw your attention first to the free cash flow forecast. 22.34 billion is the starting point I'm jumping from. That's the most recent trailing 12-month free cash flow number, 22.3 billion. And to grow these free cash flows over the next 5 years, I'm using that 21.5% growth rate that we got from Yahoo Finance from the analysts that are following Taiwan Semiconductor stock and their estimates for earnings per share growth. After the first 5-year period of these above 20% growth rates, I'm going to have the company going through a transition period where it grows its earnings per share at half the rate it did in the first 5 years. So I have it growing at 10.75% over the next 5 years. And then in the long run, I have the company's earnings per share growth settling down at the long-term growth rate of 5%. So when I forecast these cash flows all the way out to 2035, and then that's not all we need to do here with these forecasted cash flows. We need to discount them because these are cash flows that are owed to us, entitled to us in the future, but money in the future is not worth as much to us as money today, so we need to discount that. The discount rate I'm going to use for Taiwan Semiconductor is 13.78%. I arrive at this weighted average cost of capital using a cost of debt of 6.5% and a capital asset pricing model cost of equity at 14.16%, utilizing that beta of 1.27 with the risk-free rate of 4% and a market risk premium. I usually use a market risk premium of 6%, but given that Taiwan Semiconductor is in a country outside of the United States, and that country has increased geopolitical risk, I'm adjusting upward the market risk premium here to 8% from 6%. Also, you can see that the company's financed mostly through equity. It has only 29 billion in debt with a market cap of 1 trillion. So I'm establishing a target cost of capital weighting of capital at 95% equity and 5% debt. So when I discount those cash flows in the future back to today, the present value of all of the cash flows between now and 2034 comes in at $279 billion. Now, instead of forecasting all of these cash flows from today out to infinity, I can use a shortcut to take the cash flows expected from the year 2035 and onward and bring those back to the year 2034 using the terminal value calculation method. To use this method, you take the free cash flow expected 1 year ahead divided by the weighted average cost of capital minus the expected growth rate. And so when I utilize that calculation, I get a terminal value of $1.179 trillion for Taiwan Semiconductor. But again, I need to discount this value back to today. And when I do that, I get the present value of the terminal value of $324 billion. Summing up the PV of the terminal value with the PV of the cash flows, we get a value of operations of $604 billion. But we're not done yet. To this total of the value of operations, we need to add a company's cash balance and subtract the company's debt. So when we add the 68 billion of cash and short-term investments and we subtract the long-term debt of 29.6 billion, we get a value of equity of 643 billion for Taiwan Semiconductor. But we want to know the price per share. So we need to divide that value of equity by the number of shares outstanding, which was 5.186 billion. And we get an intrinsic value per share for Taiwan Semiconductor stock at $124. Now, that's significantly below the current trading price of $196. So the intrinsic value per share would suggest that the stock is overvalued. That being said, I have Taiwan Semiconductor stock rated as a buy, and I last updated that recommendation on October 17. And this goes to highlight that I don't only use one valuation method to come to a conclusion on an investment. The discounted cash flow valuation model is just one of the tools that I use to come to a conclusion on an investment, whether or not it's a buy, hold, or a sell. Sometimes all of the calculation methods point to the same conclusion, and sometimes the different valuation methods point to different conclusions. And so as an analyst, I'm forced to use judgment in weighting these different valuation methods and how to evaluate each one to come to a conclusion on a stock. But just using the intrinsic valuation method, I come to an intrinsic value per share for Taiwan Semiconductor at $124. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.